Hello, I'm Wallace, co-founder and chairman of Quantamize.com.
And I'm Steven, co-founder and CIO of Quantamize.com, and you're watching the Quantamize Weekly Recap for Global Markets. Why don't you talk a little bit about macro, Wallace?
Well, this past week has been a very bad week for U.S. markets, volatile and ending materially in the red. Driving this downdraft are concerns over slower global growth, rising interest rates in the United States, and the continued dragging on of the trade dispute between China and the United States, although recently there has been, again, optimistic talk about finding a solution. What is of note is that Germany and Japan, the fourth and the third largest economies in the world, actually reported economic contraction in the third quarter. As we have noted in the past, the tale of the tape in the United States is going to be told by the consumer. And at the moment, the tale is not looking promising. In the fourth quarter alone, consumer discretionary stocks are down 10%. The S&P in this period is down 6%. Three of the largest consumer retailers in the United States, Macy's, Nordstrom's, and Dillard's, reported mixed to negative results, suggesting that the market is not anticipating a strong consumer in the fourth quarter. The focus for the remaining time of the year will be upon consumer spending, rising interest rates in the United States, and whether there can be any progress achieved with respect to the China-U.S. trade deficit. And Stephen, why don't you talk a little bit about how these effects are being manifested into the marketplace?
It's a great point about consumer stocks. Just keep in mind, consumer spending is roughly 60% of GDP, and the majority of the consumer discretionary stocks book their revenues and profits in the fourth quarter. The market's going to be closely following that period. An interesting point that we highlighted earlier today, the ratio of NASDAQ 100 stocks to the S&P 500 has dropped more than 5% since the end of July. The majority of that has been driven by underperformance by the FANG stocks, Facebook, Amazon.com, Netflix, and Google. This is suggesting right now that large cap tech stocks may lose their status as U.S. stock market leaders. Global oil prices are rallying into the weekend as it's becoming increasingly clear that OPEC will cut production by 1.4 million barrels. Large cap energy stocks now have an average dividend yield that is 1 point above the average dividend yield for the S&P 500. This is suggesting to many investors that energy stocks present an attractive value buying opportunity. At Quantamize, we continue to favor owning Brent crude outrightly as opposed to buying energy stocks. We expect the Brent WTI spread to continue to widen from roughly $78 currently to about $10 to $12 in calendar year 2019. Don't forget to check out Quantamize.com to get your full market analysis for stocks, options, ETFs, and cryptos, and to find out what trades our AI quant models like today.